What's hotter right now, the Southern California weather or the Southern California real estate market? We are starting to see things chill down a bit when it comes to the Southern California median price. We're going to run through those numbers in the Southern California Housing Market Report. Well, fancy meeting you here. Thanks for coming. We're going to run through a lot of data. We're going to do it pretty quickly. Looking at Orange County single-family homes, we're going to look at all the Southern California counties we cover, and we're comparing the number of sold properties, which is old news. Those were new listings and pending sales. Now they're closed. So there's not much there that is exciting, but it is good to track and see where those are going. Number of properties under contract, so buyer demand. So we want to see buyer demand continuing to go up. That's a healthy market for sellers. And new listings. So what we can see quickly, looking at August going all the way back, we had an increase in the number of new listings. And in Orange County, we had a drop year over year in the number of pending sales. So according to these numbers, this is actually a record low for pending sales in the month of August, going all the way back to 2018, and probably going all the way back before then. Even during the global financial crisis, we still potentially had more homes going under contract within a month. It is a time where affordability is absolutely crushed because we have high interest rates and high prices. And when we go through the median home price, you're going to see the effect on prices that the high interest rates and lack of affordability are having. There may be good news coming. We may start to see interest rates drop more. They were dropping actually in August. So it's interesting to see pending sales drop at the same time we saw some interest rate drop. But I guess that wasn't enough of a mortgage interest rate drop to see more demand, at least in Orange County, which has the highest median home price in all of Southern California. Moving into Los Angeles, single family homes. So this is everything condo, townhome, single family. That's what we're covering here. We're going to do multifamily next. So we can see this similar trend, and we're going to see that throughout Southern California. Inventories going up. Sellers may be feeling more confident after seeing the rate drop, saying, hey, put my home on the market, or maybe they just need to sell. People get running out of money, and even though they have their low mortgage interest on their house potentially, they could still be running out of money. So we will have to see if the late payments start to show up in our foreclosure data that we do. So here in LA, we have an increase year over year in the number of properties going under contract. Not a huge increase, a larger increase in the number of properties that were listed, and could be trending up to more normal levels, although it's got a ways to go. You can see back in 2018 and 2019, we had over 8,000, almost 9,000 new listings in 2018. And almost 8,000 in 2019. So we're still way off those numbers throughout Southern California. Riverside, same trend with the increase in new listings and slight increase in number of properties going under contract. So this gap between the number of new listings and properties going under contract, the bigger this gap gets, the more it's a buyer's market. So it's not a huge gap. It's nowhere near actually where it was in a normal market in 2018, but it's larger than last year and certainly larger than during the crazy years of 2020 and 2021. Pretty similar to 2021, but still that was a crazier year because interest rates were lower. So San Bernardino continued to drop like every other county, but increase year over year in new listings, increase in demand. So it actually looks, I'd need to pull out a protractor and a ruler and a tape measure and a magnifying glass, but it looks like the gap between pending sales and new listings is actually smaller this year than last year. Actually, I don't think I need a protractor for that one, but it's just fun to say protractor. Ventura, always marching to its own drummer and continuing to see a drop in the number of properties under contract. We have been seeing this for the past few months. Ventura is very slow for the number of properties going under contract, and we're seeing an increase in new listings. So we have to keep watching the inventory levels in Ventura to see if they get to that point where we're going to start to have big price reductions. Yeah, we're going to cover the Altos Research data and show you. San Diego, look at that increase that we have year over year in number of new listings. Slight increase in number of properties going under contract, but definitely a wider gap than last year if you're searching for a home. It's slightly more of a buyer's market. So there's the single family data. You always want it, and I'm going to give it to you. Multifamily data coming up next. Diving into the multifamily data, you asked for it and it's here. You can skip this section if you don't care, but I think it's good to actually track the entire market. So this is everything 2 units and larger on the multiple listing service. And we can see that inventory is up year over year, just like we saw with the single family market. But look at pending sales. Holy smokes. That is a big increase, 50% increase over last year at this time, and bigger than 2022, bigger than 2021. Okay, I could just say this is the biggest year for pending sales in Orange County. So that's interesting. So interest rates were much lower back here and are good, but they're nowhere near where they were here. They're actually nowhere near where they were in 2018. So it's tough for properties to cash flow when the debt service is so high. It did drop, like we talked about, slightly, and it looks like it's translating, at least in Orange County, into a more solid multifamily market when it comes to investors out there tying up properties. We are getting close to the end of the year, theoretically. Well, I know it's only September, but it's coming. Be prepared. So investors may want to be locking in 1031 exchanges before the end of the year. So we could see a pretty busy fourth quarter. That's a general trend with multifamily. Los Angeles, we have a year-over-year increase in number of properties going under contract. Interesting to see in such a tough market, a market that has the rent stabilization ordinance, where landlords were finally able to give their first increase in many years of 4% for RSO properties. That's very difficult to get a property to pencil when you have crazy low rents and mortgage interest rates are higher, eating into your cash flow. What has to flex there? Well, the price has to flex. The investor has to get at a low enough price for it to make sense. So we could be seeing that in Los Angeles multifamily, where investors who are selling are being realistic on pricing. I know we've seen duplexes, for example, a few listings we've had where if you're realistic on price, it goes. And we got more coming, fourplex and some other stuff. So make sure you subscribe to our newsletter because we got a lot of stuff coming from a listing standpoint. And if you're out there shopping, you need to be subscribed to our newsletter. Plus, you're going to get all these charts so you can look closer and don't have to hear me yammering. Riverside multifamily, we are up. The amount of new listings is up year over year, slightly down for the number of properties that are under contract. Looks like 2022, when interest rates got crazy, that was the bottom of the market. And we're seeing that in some of the other charts that we're showing you for other areas. Because interest rates got so high so fast and we had just been gorging on such low interest rates, definitely affected the market there. But it looks like investors are saying, hey, you know what? I've adjusted and it's time to shop. And same thing, inventory up slightly for San Bernardino, but look at that big increase in the number of properties under contract. Another one where we're seeing almost record levels, although 2018 was a hot time for properties going under contract. Ventura, not as much inventory there, so it's tough to draw much of a pattern out of this, but we can see here that 5 went under contract, 11 new listings, so not too out of whack with multifamily. Single family, we saw the drop year over year, big drop year over year in demand. Multifamily, we're not seeing that. So interesting to note the differences. San Diego, look at that big drop we had in 2022 for inventory. Again, interest rates had just gone through the roof compared to where they were before, and we could see it affected the market there. But here we are, inventory's up. It's actually more of a traditional level of inventory. You can see that in years past it was in that 140-ish number, and then not too far off from demand, actually stronger than more normal years. We have more demand out there. So look at that. Aren't you glad you stuck around? And if you didn't stick around, you don't have to worry because you didn't hear any of this and you're not hearing this now. And don't forget, we're real estate agents based in Southern California. Don't even think about buying or selling any piece of California real estate without talking to us first. Oh yeah, time for some median home price madness. Here we are looking at a drop month over month in the median home price. Is this shocking? Should we be running in the street saying the end is nigh? No, that's what happens typically this time of year. We peak in the summer for median home price and then it starts to drop. So that is not shocking at all to see this. And in fact, I expected it. And if you were watching these videos, you probably expected it. Now, a couple of things to point out. One is we are still, for all of the Southern California counties, we are above the April 2022 peak that everybody's been talking about. A lot of people say May in Southern California, according to InfoSparks. For median home price, it was April for most of the counties. So we're still above those. In some cases, just a little bit above, but we're still above those. The other thing to check out here is the year over year increase in median home price. Now, this is houses, condos, and townhomes. So this is not just houses. So if you do just houses, you're at 1.2 or higher for the median home price. Those darn pesky condos and townhomes drag it down a little bit, but that's what we always do. So we're going to continue to have apples compared to apples. So we can see For OC, we're below that 1.2 median home price. Not a terrible thing. Like, we don't need such a huge median home price. And that is a 6.8% increase year over year in value. Little more manageable than the 20 pluses we've seen before. LA is up 3.4%. Riverside is up 3%. Interesting, how much is inflation up, according to the numbers we're hearing? Around maybe 3%. So you could make the argument that with Riverside, those homes are up 3% for the median home price year over year, but actually that's flat if you're comparing inflation adjusted dollars. All right, moving into the other counties, San Bernardino, Ventura, San Diego, and yeah, look at that big drop we actually had in San Diego. It went from 945 to 890 in 2 months. So that's a pretty big drop, but still, these are all above where they were in that previous peak of April 2022, whatever that's worth. So we can see San Bernardino up 2.9% year over year, again, close to that 3% inflation mark. Ventura, even though we can see the pending sales are down, prices are still up 4.4. And interesting to see San Diego only up 1% year over year. We have to keep watching that to see what happens. Is it going to go negative again? Remember, we did have negative year over year price changes, and then we saw them turn positive yet again. But keep watching San Diego. And again, inflation adjusted dollars, that's a loss right there. Let me know what you think in the comments below. You knew it was coming. I had to go through the Altos Research Reports because I love these things so darn much. You better be subscribed, because if you're not, you're missing out. You can get these delivered to your email inbox, and it's just like a little bit of number joy all bundled up, and you'd be missing out if you don't get it. The other reason I wanted to make sure we ran through this is we saw on our first charts that new listings were increasing. And we could see that it appeared that the gap was increasing between pending sales and new listings. So I wanted to see what was happening to inventory. Is inventory in general doing anything crazy in the market? Well, what typically happens this time of year? So we can see in a normal year, when we look back to here in 2019, that this is the time of year where inventory starts to drop. Saw it in 2020, saw it in 2021, 2022, 2023, it dropped a little bit. So 2024 in Orange County, and each county has a slightly different path for inventory historically. And we can see that we are leveling off, but it's going to be important to track and see what happens going into September and the rest of the year for inventory. Isn't going to turn and start to decrease like what typically happens this time of year in Orange County. But let's look at the other counties to compare. LA inventory, again, we see it's higher than it was last year, about where it was in 2022. And nowhere near was in normal years, which we've established that. But what typically happens in LA this time of year, it actually continues to flatline or go up a little bit going back. And even during the crazy years, what's interesting, I know these are atypical years, but the trend still seems to be there. So this time of year, unlike Orange County, where it was already heading down, even last year we had an increase through the rest of the year. So it wouldn't be crazy to see inventory levels continue to go up or flatten out in LA. What would be bad is if they turn and go in a sharp increase. That would be too much inventory, would lead to big price drops. So again, important to watch the typical trend. So here we are with Riverside, and we can see that actually in a normal year, inventory continued to go up, and it's either flat or continues to increase slightly. It actually continued to go up pretty high in 2023, and I remember watching this thinking, boy, if that doesn't turn, we could get into a level of inventory where we start to see big price reductions. Now it's leveling off. Where will it go next? Well, if we look at years past, it could go up and a little bit more, and then it'll turn. That's why you got to watch this and know your trend. San Bernardino, what happens there? Well, again, like Riverside, it actually went up in normal years and then turned. Stayed pretty flat, went up a little bit, and then turned, went the other way, and it is slowing in its increase. Looks to be doing what it normally does, but got to keep watching if I haven't mentioned that. And here we see Ventura normally drops, flattened out last year, but we should see either flat and drop or drop, not increase. And then finally, San Diego, we see a drop this time of year, a little bit increase in 2020, but drop, flatten up a little bit, and then we've seen it turning and it's starting to level out. Where's it going to go? I hope that was helpful. I hope you love seeing that trend. Hot or cold in the Southern California housing market? You let us know in the comments below. Subscribe to those Altos Research Reports and you'll get our free weekly email newsletter. Next thing you need to know is in one of these videos right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.